Hello everyone, long time no see. So I made a separate video explaining my absence, so if you haven't watched that video, be sure to go watch that one. I'm not going to repeat everything here again. However, before we get into today's portfolio review, I do have a confession to make, and it's related to the topic today. So many of you who watch this channel, I'm sure, are also fans of Jeremy from Financial Education. And if you follow Jeremy, you'll know of his disastrous bet on Tattooed Chef. Well, I think once you're in this game for long enough, everyone has a Tattooed Chef moment. If you watch Gally from Hyperchange, which I do, he was one of the first people who got me into Tesla stock. Well, he's had some other picks that were, pretty bad, let's just say, right, to be honest. Namely Arcimoto. But, what is my bad play then? I'm sure some of you have guessed it already. Yep, it is Hyliion. So I'm sorry to disappoint those who are still holding Hyliion. You'll have to continue the rest of your journey without me because I have admitted defeat on this one. And I think it's a really good quality to admit your mistakes and admit defeat when you've been defeated, right? Instead of just trying to carry through something that obviously is not working. So I think I took like about an 80% loss on that one. I won't say how much exactly the exact number was, but the percentage was relatively big. But I'll give you a hint. It was like a multi-$1,000 loss, right? So it might not seem like a lot to you, but it is a lot to me. And let's just take a moment to reflect on why I failed. Again, I think it's okay to fail, but it's just we have to evaluate the reasons why we fail, okay? So I think back in 2021, I kind of got a bit lost. And I'm sure a lot of you did as well. Where everything was going up, the stocks that were just selling ideas but not actual products were starting to get bid up. And yeah, I just started investing in companies that sold promises instead of actual products. I find that life often punishes you when you deviate from your core principles. And when I started buying companies that had no fundamentals, that were just pure spec plays, that's when I started asking for trouble. Hyliion, if you guys don't know, it's an electric trucking company that promised to use natural gas as an onboard generator to extend the range of the truck. I mean, theoretically, it was a very good concept. I just think that, it's a great idea, but it's not necessarily going to succeed, right? A lot of great ideas don't succeed. But it's to the point where you got to think about opportunity costs as well. I could have stuck with it, and I still think that there could be a pathway for it to succeed, but it's also a matter of opportunity costs. Is there a place where the money can be better invested instead of Hyliion stock and waiting on Hyliion to deliver their promises, right? So I had to make the decision to cut it loose. It sucks, I know, but it is what it is. I've had some time to do some reflecting, and I will go back to sticking with my core principles, which is investing in stocks with good fundamentals that are preferably also undervalued at the moment. So on that note, let's jump into the portfolio and see what exactly I'm talking about, right? So all the stocks I have in my portfolio right now, I think is in accordance or are in accordance with my core principles. So first up, let me go through some of the metrics of the entire portfolio. So I'm up finally on my trailing 12-month return, up decently as well, only about 33%. And I know that sounds like a lot, but it really isn't because I started from such a low point, right? And yeah, my total portfolio is about 69,000 Canadian dollars or almost 70,000 Canadian dollars. Which, if you remember, again, my highest point, I hit over 100K, but I'm still down like 30% from the peak, which was in November of 2021. But, I'm slowly getting back there, and I think that eventually I will hit 100K again. It's just a matter of time. But yeah, those are the total metrics of the portfolio. And this is my main RBC portfolio. And I'll only be talking about this one today, although I do have other portfolios as well. And if you guys are interested, I can maybe briefly talk about those in another video. But for now, I'm just going to publicly reveal my main portfolio. So first up, we have PayPal, ticker symbol PYPL. And I really think that PayPal is an undervalued stock right now. Now, I had PayPal from a long time ago, and I've just held it through thick and thin. So I know a lot of people have poured into the stock recently because it's being talked about here on YouTube a lot, but I've had PayPal for a long time. Don't accuse me of copying other people's plays because I was in this stock way before a whole bunch of other people. And for proof of that, just look at my average cost. It's at 112, which I thought was a steal deal even back then, but yeah, I'm still down 34% on this position. Now, for PayPal, what is exactly so exciting about it and how does it fit into my core investing thesis? Well, first of all, they're wildly profitable, okay? So they've been bringing in almost $1 billion on the bottom line every quarter. And people think it's old technology, so the stock is beaten down. And it trades for a forward P of just under 15, which I think is just ridiculous. The stock price is at the same level as it was in 2017. Now, 2017 was 6 years ago, okay? So if you look at the type of numbers that PayPal was bringing in 6 years ago versus now, it's a night and day difference. Now, why is the stock beat up? Well, first of all, the CEO is leaving, right? So Wall Street really hates uncertainty, and this is a big factor of uncertainty. But again, if they choose a new CEO and people like this new CEO, whoever it will be, then I think that could be a catalyst for the stock to go back up, right? And also, another negative reason, another like bear thesis is that the growth is slowing down, right? The growth was less than expected. I think it's in the single digits now. So, this is in comparison to a lot of the other big tech firms like Nvidia or Tesla, who's growing like high double digits. But yeah, the growth is not as good. Despite these reasons, though, I think the market is still overreacting. So I do see a lot of similarities between PayPal now and Meta back in late 2022. So PayPal has other products as well. So if you don't know, they own Venmo. Venmo is not a thing here in Canada, but I hear it's extremely popular in the United States. They own Honey, which is that browser extension that gives you coupons and stuff that all the YouTubers promote. Trust me, I wish I could plug in a Honey sponsorship right now, but they're not sponsoring this video. If you're watching and you're working for PayPal, I'd be interested in sponsoring Honey, but yeah, anyways, that's besides the point. Lastly, they own a company called Braintree. So Braintree is not a consumer-facing company, so people don't really know about it. However, they're in the B2B payment systems, right? So I went on Braintree's website, and they also help businesses facilitate Apple Pay. So actually, Apple Pay and Braintree are not even competitors. So people are like, oh, we're not going to use PayPal. Like, PayPal's old technology is dead. Apple Pay is the way of the future. Well, Apple Pay's systems to integrate it with the merchant in the back end, the Braintree is responsible for that, right? Or at least, some merchants use Braintree to integrate Apple Pay with their system. So, I think people are totally sleeping on this Braintree thing, and that's like a huge factor of growth, I think, for PayPal. Now, you might be asking, okay, why do I only have 10 shares then if I'm so bullish on PayPal? And I'll actually have something to say to that in the end. So leave that thought to the side for a second. I'm going to come back to it. But moving on, the next up we have Block or Square. The ticker symbol SQ is it still sells Square, but they renamed it to Block. But I'm going to use Block and Square interchangeably in this video. It's just too hard for me to adapt because the ticker symbol still spells Square. But anyways, this is another fintech play, and I know you guys know that I love fintech, and you guys probably love fintech as well. With PayPal, I own a piece of Venmo, which is the number 2 payments app in the United States. And guess who's number 1? Yeah, that's right, is Cash App, which is owned by Square or Block. So I think that Square is just a riskier version and a higher growth version of PayPal. This company is also owned by Jack Dorsey, who's the founder of Twitter. And Dorsey is also, he's a Bitcoin maximalist. So I think there's a massive opportunity in Bitcoin ahead for Square, which, Dorsey's directing some projects, and I think they're trying to get into Bitcoin mining as well and stuff like that. I think that's a big area of growth for Square in the future as well. So I have 10 shares of Square at an average cost of 108.77. So yeah, I'm down like 29% on this still, but I'm not really worried because I think there's massive growth opportunities. If you just look at where Square was, its all-time high, I think I hit like almost $300 or something like that during its all-time high. So, I know it seems that I bought this stock really high, but I think in the long term it's still going to pay off. So anyways, talking about Bitcoin, the next up stock on my portfolio is MicroStrategy. So I'm just at break even for this one, also 10 shares. So literally like I'm up like 50 cents, right? Exactly at break even right now. So this is a pure Bitcoin play for me. So I often forget that they actually do have a software business as well. But face it, no one is in this stock for the software, okay? This is essentially a Bitcoin ETF. So I know there's news of the ETF being a thing in the United States finally, with BlackRock filing their application. I can make a separate video talking about that. I won't get too deeply into that right now. But essentially, if you think about it, you don't really even need a spot ETF in the United States because you have MicroStrategy, which is essentially a Bitcoin ETF. Except I think it's better than an ETF because MicroStrategy actually has a strategy to acquire more Bitcoin. So they actually borrow money at a low interest rate, which because they're a multi-billion-dollar company, they're able to borrow money at a much lower interest rate than you as an individual or even smaller companies, and they invest that money into Bitcoin. So it's almost like a leverage play on Bitcoin. My belief is that there will be another Bitcoin bull cycle, which, if you're a Bitcoin bear, then forget I said that, then just ignore what I'm saying. But if you are at all a believer in Bitcoin, then you must believe that there will be another Bitcoin bull cycle, in which case MicroStrategy has the ability to go up more than Bitcoin itself because, like I said, it's a leverage play on Bitcoin. So if $430 per share of MicroStrategy is equal to a 30K Bitcoin, then what if Bitcoin goes to 100K, right? So you can do the math and add a little bit of leverage to that and calculate how much you might have to gain or how much I could potentially gain from MicroStrategy stock if Bitcoin goes to 100K or even higher, right? And I believe that it will go higher during its peak at the next cycle, which if it follows the cycle exactly, the next peak is expected to hit in November or December of 2025. So we're still a little bit ways away from that, but I have patience for that, and I do believe that that will be a thing. Now, talk about Bitcoin and crypto. Coinbase is my next stock. So this is the one that I'm down the most on by far. And I know it looks really bad, but I'm actually not worried, and I'll tell you why. So again, this has to do with the BlackRock Bitcoin ETF news. So here's like a very quick summary, right? So at BlackRock, one of the biggest asset management firms, I think they manage $9 trillion, and they're the issuers of iShares ETFs. So anytime you see iShares, that's a BlackRock product. So they're trying to bring a spot Bitcoin ETF to the United States. And once they come in, then once you let one company through, you have to let everybody through, right? So there's a bunch of other companies that are trying to file spot Bitcoin ETFs as well, namely Fidelity, WisdomTree, VanEck, like all the big companies that issue ETFs that you can think of, right? So in order to issue a spot ETF for Bitcoin, though, they have to partner with a crypto custodial partner and a crypto kind of surveillance partner. So the main point, just a brief summary, the SEC wants this surveillance agreement to be in place to prevent what they call market manipulation, right? So they need a big company to monitor the market, and if some funny business goes on where it looks like there's market manipulation, they need to be able to like go to like whoever the surveillance partner is and be like, can you investigate this suspicious activity for me? So the only one that's able to do that in the United States in my opinion, is Coinbase, because they're the only kind of custodial partner that's really big enough and surveillance partner that's big enough. Maybe you could make an argument that they were going to toss it to FTX before, but obviously we know what happened with FTX, right? So FTX is now gone, so Coinbase has no competitors now, and other crypto companies are simply too small. So I think Coinbase does have a monopoly on this, a 100% monopoly, because I haven't really seen a single ETF application that is not involved with Coinbase at some point, somehow. So that's the benefit of Coinbase. Right now, though, the stock is down because people think that crypto is dead and people are scared of this SEC lawsuit stuff. SEC filed some lawsuits against Binance and Coinbase. But long term, I think you're going to wake up one day and realize that Coinbase has a complete monopoly over the surveillance and custodial partners when it comes to TradFi, traditional finance, and their involvement in the Bitcoin/crypto industry, because Coinbase runs all the infrastructure that these TradFi firms relies upon. So could I have bought the stock at a lower price though? Of course, right? I bought it at a really bad time. I shouldn't have bought it right after the IPO, which is when I did. That was really dumb of me. So as a result, I'm down 50%. But long term, though, I think I'm going to make all this money back because I just see Coinbase being one of the most dominant companies in this super hyper growth industry that is crypto/Bitcoin. Yeah, I think I'm going to make my money back and a lot more. So I'm not worried about this one. Last stock, do I even need to explain this one? Is, of course, Tesla. And yeah, regarding Tesla, let me just say this, right? So the stock actually initially went up after the earnings results, but as soon as the earnings call began, the stock went down, right? So as soon as Elon started talking, the stock went down. So I think that's total disrespect from Wall Street. Wall Street just didn't hear what they wanted to hear from Elon. They wanted Elon to focus on the short term and bring the margins back up. But I think Elon is more focused on cutting prices so that he can take market share. And I think long-term market share is way more important. And Wall Street just doesn't see it, right? They just don't want to deal with that. They want to make money now as opposed to later. So we'll have to see what's right? So is Elon right for cutting prices and encouraging more EV adoption? Or do you think that he should focus on maximizing profit right now? I think the answer is pretty clear, especially if you're a long-term holder of Tesla and you're not just trading in and out of it. I think we all want Elon to focus on the long term and take market share, right? So I'm personally okay with the price cuts, and heck, if the price goes low enough, I might just buy a Tesla, right? I might be their next customer. But yeah, anyways, I scooped up some shares of Tesla, let's just say, after the earnings call. But yeah, anyways, circling back, I did say that there was one more thing that I wanted to talk about with regards to PayPal, and why I only have 10 shares of PayPal if I'm so bullish on it, right? Which is only worth not even $1,000 right now. And the answer is I'm getting back into call options again. And if you don't know how options work, I unfortunately don't have time to explain to you in this video. I'll see if I can find the video, though. I did make a video talking about how options work way back in the day. But essentially, yeah, I'm just going to go watch that video if you don't know. I'll just continue on with this video. I bought 2 contracts of the exact same calls, and they're at $60 strike, expiring in December 2025. So I got the longest dated options I could find, and I paid $21.41 per option. So my break even is the strike plus what I paid, which is $81.41. Let's just call it 82. And in my opinion, if PayPal is not at least at $82 by December of 2025, I don't even know what to say, right? That would just be insane in my opinion. So I think I'm very unlikely to lose money on these calls, but again, not financial advice, anything can happen. Don't do what I do. My goals are not your goals. Right now, at least, it's going pretty well, I would say. It's already up. These call options are already up 33.5%. So yeah, it's going good for now, but I'm not going to sell them, even though I'm up 33%. because I'm actually looking for a much bigger gain than 33%, right? So, if I'm right, I think PayPal could easily double. Again, not financial advice. Don't just do what I do. Do your own research, please. So anyways, that's it for my portfolio. As you can see, I've trimmed down a lot of stocks. I used to hold, I don't know, like almost like over 10 stocks. And right now I'm holding just the ones that I presented. So I've trimmed down my portfolio a lot, and I've really boiled it down to companies that I really believe in the long term, right? So it is my belief that you shouldn't have too many stocks, because if you have a portfolio of like 15 or 20 stocks or even more, I see some people that have like 100 stocks. At that point, it's like, what's the point? Why not just buy an ETF, right? So I think I'm a big believer in just having a few stocks that you really believe in, because if you have, let's say, more than 15 stocks, there's got to be a few that you like more than the others, which is, what's the point of holding on the stuff that you don't like as much when you can just sell them, take the money, and put it into stuff that you like more, right? So that's just my opinion. Again, not financial advice. Don't make any portfolio decisions for yourself based on what I'm saying. But that's it for my portfolio. Hope you all enjoyed this video. And I'm really happy to continue this channel and see where it goes. So be sure to follow me on Twitter. I guess it's called X now. Like, be sure to follow me on X. And I'll see you guys in the next video. Bye-bye.